Bonjour tout le monde, welcome to the Flagship Podcast. I'm your host, McCrea. This show brings you inside stories from the Canadian technology ecosystem. You'll hear from founders, investors, builders, and learn about the triumphs, hardships, and hard-earned lessons. You'll learn about the strategies and tactics they use, but also the human side about what it takes to build a thriving company, which will hopefully help you on your journey. On today's episode, I had the pleasure of speaking with Jordan Steiner and Max McCrea, co-founders at DevCap, also known as Developer Capital. DevCap is this cool new fund launched by Max and Jordan quite recently, and their focus is really AI at the pre-seed. So it's a fascinating conversation with Jordan and Max that launched this new fund, and it's fascinating in several ways. One, they're not launching your typical VC fund. It's really structured as an evergreen investment corp, and we spoke about the reasons they chose to do this. And then obviously we spoke about their thesis as to why, why AI is important, all the cool things that it's unlocking, and really from the investor perspective. And finally, about fund building or company building, how they think about cultural principles, their deep trust, and how it was forged by having this long-standing friendship together. Really fascinating conversation. Jordan and Max are super sharp. I'm going to definitely have them on for round 2. I really hope you enjoy today's episode. Jordan, Max, pleasure to have you guys on the podcast. There's so many cool things I want to talk about and learn from you both. But to start, I want to talk about your relationship, right? As co-founders. How'd you guys meet? What's the backstory?
We met in Las Vegas in, 2006. We were both online professional poker players at the time, both very young. I think Jordan was 21, I was 20. Ignore the fact that I was under 21 and playing at the Wynn, but we were both playing at the Wynn and became friends. I moved to Montreal a year later and we'd kept in touch, and I guess we started hanging out. And I guess a few years later, I left the online poker professional kind of career to do AI. I did a dual degree in in computer science and philosophy, ended up doing a specialization in machine learning. Worked in that field, and I guess Jordan went into finance, and we have been friends ever since, but our paths converged again a couple of years ago, a year and a half ago. Yeah, I don't know. You want to tell your version of that?
Sure. Yeah, no, like Max said, we met in Las Vegas, and we were both members of the same online poker community. So we'd been talking a lot online and sharing advice with each other and other top online poker players back in the day. And we did finally meet up in Las Vegas, and then again in Montreal. It's not a huge community, so we started hanging out, and we just hang out all day and play poker tournaments and watch football and drink some beer. And from there, we just stayed friends, and I went off and did my 12 years in finance, and Max went off and did his 12 years in machine learning. And then when I saw 18 months ago ChatGPT, I had my AI moment, and I realized I need to get involved in this. Who do I know who's been doing AI and never shuts up about AI for years? It's my friend Max. So I took him for lunch, and over a series of lunches, we figured that I need to take this chance and make a huge switch. And Max is my way in and my friend, and it's always fun when you can work with friends. And let's just figure out a way we could do something together, and I could come work with him.
Yeah, so at the time I was running, I guess I'm still running, Monadical, which is a software development consultancy. We do a pretty wide variety of things. Included in that wide variety of things is AI, I guess, engineering. We call it usually machine learning or data engineering most of the time, but that kind of work. I've been doing a lot of R&D with, what's the word here? With generative. Thank you. Thank you, Max. We've been doing a lot of work with generative, like R&D with generative AI in the past couple of years, leading up to the launch of ChatGPT. It was very clearly at that time, at least from my perspective, turning a corner. The technology was reaching a point where a lot of things that showed a lot of promise were suddenly delivering on those promises and delivering value to enterprises. And so we were already pivoting when Jordan reached out to me, and he joined our company as chief strategy officer. Who knows what that means? Didn't matter. It's like, you're smart, hardworking, and I like you, so we'll figure it out. And of course, you put an investor, finance guy anywhere, the next thing you know, you're launching an investment fund. And that's how DevCap came around.
I really like this story we were talking about before recording about the importance of trust, right? And you guys having this long-standing relationship and probably a lot of like R-rated stories that we won't be sharing today. And so building on that foundation. So the original idea, there wasn't this master plan, hey, we want to launch an investment fund. It's more like, Jordan, let's work together at Monadical and then figure out something. Or was there already the embryo of the idea of a fund?
No, when I first talked to Max, it was just, we have complementary skills. I come from a big picture, I come from public markets, right? And I come from a fundamental bottoms up approach, which is just doing research. It's just reading and understanding things. I did focus on tech, but it was really a generalist approach I took. So I looked at all sectors, and you look at what Max's company was doing. Sure, it's building tech, but again, if you look at the end markets and the products they're delivering, it's across all sectors. So to have that, to understand, oh, we're helping this startup build their MVP, we're helping this startup scale and do a massive migration of their backend. But you understand the ecosystem they're already in, who the competitors are, who the big guys are. It helps on the consulting side, which is ultimately what Monadical is. So the plan was, let's just focus on that. But then once I got involved and saw that Max was already helping these startups and the really early stage stuff, we always say they shouldn't hire us. They need to go out and build their own team. So Max was meeting these guys and turning them down, saying, hey, I like you. Don't hire us. Hire your own devs because you're early, and come back to us when you've closed the seed or Series A. But in the meantime, here's your advice. So here's some advice about how to scale and get to that level. And these are all the mistakes I made, because Max was a founder himself, and he failed because he wasn't good at a couple of the parts that were hard, like fundraising, and he could tell that side of the story. But he was really good at the rest of it. And what he learned through that failure as a product company and being the CEO and founder of a product company, he was already using to help these pre-seed stage companies. So I look at what Max is doing. I understand my background, and I say, man, we can really do a good job and handle a lot of the parts that traditional venture cap firms aren't really equipped to handle. The guys like you, Nectar, who focus on Series A, you're more equipped to handle that. You have the tools in place. You understand the technology. But really at the pre-seed level and seed, but we focus on pre-seed more, we aren't seeing that specialization. We aren't seeing that expertise. And we thought we could bring that to venture through DevCap and be pretty unique, at least in Canada.
Yeah, to add on that, I guess my sort of philosophy with Monadical has always been that the thing that really sets one engineering firm apart from the others is the talent that they have. And so if I wanted to have the best consulting firm possible, my job was to create the work environment, structure, support, and culture that is the most inspiring, awesome company for the best engineers to come and work in. And it seemed to me, at least from my experience fundraising, which was not pleasant, that I hadn't really seen, and maybe that's because I don't know how to make the right connections with the right people, et cetera. But I'd never seen a early stage venture company approach it that way, right? Like, how can we make the experience of working with us as an investor the best possible experience for you, the entrepreneur? And so that's a philosophy that I thought we could bring and maybe differentiate ourselves a little bit. And with our kind of complementary skill sets, when Jordan came to me with this idea, I was like, I don't know anything about investing. I couldn't even raise money for myself, let alone figure out how to invest in other companies. But yeah, he was a pretty successful public markets investor. And I think that he could probably figure out most of the things that I have no clue about. And I do think that I have been helping early stage entrepreneurs with all kinds of problems for many years now. So I thought it might actually kind of work. The first thing I wanted to do was falsify any assumptions that we had, right? Will entrepreneurs actually care about this? And will we be able to actually raise money for this idea? The market was really down at the time, which of course was a reason to be investing, of course, but it also means it's harder to get the money to invest. So we wanted to falsify both assumptions. We went to a few different major conferences and reached out to a lot of people that I know to ask them, to talk to them. So I'm talking about entrepreneurs here, people who are building companies at the early stages. We talked about them, the fact that we were thinking about starting this company, this investment fund, and what it would look like and what kind of services we could offer. Is that something that's interesting to you? Do you think that's different from the things that you've seen, et cetera, et cetera? We got really good feedback. People that we were talking to were really excited about the idea of working with us if we were going to offer these kind of complementary services along with investment. And And then on the other side, Jordan reached out to some of the people that he'd worked with back when he was a portfolio manager, and people sounded pretty excited about the prospect of investing in the project that we were launching. So we decided to finally pull the trigger late last year and started going around and fundraising. I finally learned what a competent fundraising process looks like from Jordan, and we were able to raise, and we just launched it about a month ago now, 2 months ago.
Very cool. Very cool. It's official. Like now it's official. We could talk about it, which is like the point of the pod. Before we talk about the fund itself, I want to talk a little bit about culture, because I think Max, you raised a few very interesting points. This concept of like founder NPS. So make sure that the founders have a very high experience, which I'm like very new to the field of investing in as a VC. And I think there's only one way to generate return is have the best people want to work with you, because the best people, frankly, have options. So I like this idea of like how we build the best experience. And I want to touch upon a little bit about Monadical and what you guys are doing there. I noticed that you have this very cool principles and handbook, I imagine inspired a little bit a la Netflix, that has these kind of core tenets. So one, what's the origin? And then B, are you looking to use that at all as well for DevCap?
Definitely. So Monadical evolved out of this kind of failed product company. When I founded that product company, I had previously worked at two different firms. One was a machine learning as a service firm that I thought had one aspect of culture down really well. It was a place where people really cared about being awesome at their jobs. There was a lot of pride taken in the quality of the work. The people were really smart. But then this other aspect of culture that I saw there was not so great. There was a lot of ego. People didn't communicate what they really thought, and people didn't feel safe to about communicating things in the same way that they should. People would, get defensive if somebody disagreed with them, right? So then I worked at this other organization that was a nonprofit organization, and it was like the opposite, right? It was people had no ego. Everybody really wanted to help each other. They were really nice. They were awesome at like operational execution on things, but there was just not a lot of pride taken in technical excellence at this company or at this organization. And I thought, if I were to start my own company, I think I really want to be able to get both of those things. And so my thought process was basically, okay, I'm going to borrow the cultural principles that I learned from this nonprofit organization around how to communicate, how to take feedback, how to take pride in getting feedback, right? Like that information that people have about how you can be better, right? Let's feed that into this idea of wanting to be the best version of ourselves, right? Let's try to marry those two ideas. Let's try to take a lot of pride in our work and use the fact that other people know something about how we can get better at ourselves as a way to justify feeling great when somebody criticizes what you do. So that was the underlying idea that I tried to imbue in Monadical from the start. And of course, it wasn't called Monadical at the very beginning. And that's carried over, I think. And that's the sort of the culture that I also want to bring to the table when I'm investing in entrepreneurs, right? I want to help them. I want to invest in people that see the world that way, that really care about the thing that they're building, and they want to be awesome at it. And they want all of the advice and all of the resources that they possibly can to be the best at what they do. And so, of course, not everybody operates the same way, and not everybody is a great fit for that sort of culture. There are other aspects of Monadical that I think are unique in that we have a kind of low hierarchy structure. It's remote first. And so it really only appeals to people who are like very comfortable working on their own without a whole lot of interaction with other people on a regular basis. And some people thrive in these open workspace environments where you just hear people talking about problems everywhere around you and it inspires you. That's not Monadical at all. And so, of course, I'm also looking for the kinds of people that vibe with the sort of approach that we've taken in building our company as well.
In terms of carrying over to DevCap, we have borrowed some of the principles. A lot of them apply whether you're investing in other companies or running a software consultancy and building a great tech team. And the core one that's come up the most so far is we made a policy early is to give founders a reason why we say no. So often you hear stories about these VCs that went deep in the due diligence process, and you use up these founders' times, and they could be out there building their company. Time is literally money in VC. You're burning cash as you get to break even, and they're sitting there talking to you. And so often we hear they just get ghosted. And I just think that's awful. If I'm going to use a founder's time, which I do, to go through my process, and the answer is a no, which it often is, at least I could give them feedback as to why it's no, so they could learn something. Occasionally, they may get angry about it or upset, but that's pretty rare. Most of the time, they're pretty thankful, and they'll even reach out to me and ask and try to understand why, so they could improve and maybe think about their business in a different light that my no highlighted for them.
Yeah, I would add that when I was fundraising myself back in the day, I'd come from the poker world where social signaling is not a thing at all. And in fact, if anything, other people thinking I was dumb was to my advantage. And so I was really blindsided by the ways in which the VCs that I would talk to would just lie to me. They would tell me things like, "Oh yeah, that's super interesting. I'm really excited about the project that you're building." And they would be telling me that because it's in their best interest, because if it turns out that other VCs are really excited about what I'm building, then they don't want to have, I guess, lost the opportunity to potentially invest in me, but they weren't really that excited at all. That happened a lot, and I didn't understand that was what was happening. So I think that that's the kind of thing that we can do a lot better ourselves, right? We can tell entrepreneurs who are coming in and that we're talking to what we really think in an honest way. And certainly there's a signaling disadvantage there, but my thought is that we can differentiate ourselves from other investors in this way. And we say we're gonna take the opposite strategy. We're gonna try to just be the best possible experience for the entrepreneurs that we're investing in.
Yeah, it touches on one of the tenets you have in your handbook, which is transparency, which I really like as a concept. And I think you guys know better than me how hard it is to start something, to be a founder. So I think it's owed to them. If that particular investor doesn't like your project, well, it probably makes sense to be honest and share. Maybe let's dive into then DevCap, like a little bit more brass tacks, like stage, thesis, your vision for the fund.
Yeah, so we structured DevCap much more like a startup than a traditional VC fund. And the reason is, as Max said earlier, last summer when we went through the process of validating our thesis, this makes sense to do, we did speak to a lot of VCs. Most of them told us, "You're a little crazy to be fundraising right now because LPs aren't deploying, the market's shut." And of course, that made us excited because we know on the flip side, it means you get your choice of companies to invest in. So we came back to the problem of, I have a good track record in public markets, but that's a different animal. And Max is an unknown entity. Despite being amazing at tech, he's just not known in the VC circles. So how are we going to square that and actually be able to go out there and raise funds? Nothing we were doing was traditional. Nothing we did would fit in the Canadian institutional VC ecosystem. We'd spoken to a couple firms. They were very polite with us, but they explained, "You guys don't fit in any box that we could put you in. Therefore, we won't be able to deploy." And plus, at one of my firms, I'd been a chief compliance officer before. So I understand how much compliance is required when building a GPLP structure and getting off the ground. So we circled around to a few people we know who had done differentiated structures in the past, investment corps, and we thought we could take this structure to move quickly, start small, and move very quickly. Another core thought of ours at the time was, this is the year, 2023 and 2024, this is the year that is really the start of the AI revolution. It's like 1995 in the internet. I could go out and maybe put together a more classic GPLP structure, raise investor funds, and get going in 1998. I don't want to do that. If you look at Benchmark, I think they had one of the most successful funds of all time. It was their 1995 fund that they launched. And sure, they're brilliant guys, but part of it's timing. Part of it's, if you could deploy it in internet companies in 1995, by the time you were exiting was 1998, 1999 IPOs, you couldn't lose. So we think we had to go fast. So we set this up as a corp. We raised money from investors that are now our shareholders, and we just sold them shares. We don't have any sort of 2 and 20 model. We don't have fees. We don't have commissions. We don't have carry. We just took shares like any founder would. Founder shares are basically free. And that's our long-term payment. So there's no cash up front. There's no cash for us along the journey. All the cash is at the end when we have successful exits and we do return of capitals to our investors, and then we get a return of capital ourselves.
Yeah, no doubt that's only really possible because of the DevCap's relationship with Monadical, where Monadical is paying the salaries of me and Jordan, and we can use the fact that DevCap gives us a lot of extra business opportunities as a consultancy as well. So I've never understood how to play the game, the VC game. I've never gotten into conversations with investors. And now suddenly I am, because I'm an investor myself. And so that gives me access to a different kind of class of conversation that I didn't have access to before, which helps my consulting business. And so there's this sort of synergy between the two, right? Both companies are helping each other in a pretty fundamental way.
You mentioned Benchmark, and if you haven't read, I highly recommend E-Boys. It's like a 20-year-old book, but it talks about really that fund one. And yeah, sure, they were smart, but like you said, you have to be good to be lucky to be good, and just had amazing success because of that time. So I feel like, obviously we're going to talk about AI, but so just to better understand the structure, so you raise money from external investors, and then you deploy them into startups. Is each particular startup structured as like an SPV? Is it all rolled into an evergreen fund? How do you structure it exactly?
So we just have a corp. Right now it's sitting on, we raise all the funds up front. So that's it. There's no capital calls either. To be honest, right now, most of the cash is sitting in a redeemable GIC. So that's the one positive for us about high interest rates. We're actually getting 5% while we wait, which more than covers any sort of legal or accounting costs. So we positive carry on our investment. Then we just raise those funds. And for the founders, it's the exact same as a traditional VC fund. You take my check. I probably invest in the form of a safe note with a cap. I don't really understand no cap safe notes, but anyway, different conversation. And off we go. From our investor side, it just means, like I said, no capital calls. So it's very low touch post investment. We give them quarterly updates. And ultimately, the plans to return capital to them when we have dispositions or exits. But it is a evergreen fund. We do have flexibility there, and that's something else that we both, Max and I, really valued and wanted to set up this way to give us ultimate flexibility to make good decisions as we get more information. We're poker guys, right? Like, we're used to dealing with not perfect information. We're used to learning more as you go, both about the specific hand, and in this case, the equivalent would be specific company, but also the player, the ecosystem, and the game itself. So for us, having that optionality, that flexibility is extremely valuable. So setting it up this way gives us that we can make better decisions as we go along. I doubt it comes to it, but let's say we had one investment that was just a rocket ship. They got product market fit. Everything's going perfect. We have the flexibility to go all in on that. We could put 99% of our capital into that one company. I doubt we'll do it, but if it's the right play, our investors have given us the flexibility that we could go out and make that decision and make that investment.
So then how do you think about portfolio construction? How many startups will you invest in? How much have you raised?
Good question. So when we were starting out, I did as much research as I could on the typical returns, or let's say the distribution of outcomes that you see in angel investing. So I found a few different studies that people had done on angel investment funds and groups, and got like the distribution of results that they'd seen, modeled them a little bit using some basic like beta distributions, plugged that into a Monte Carlo system, and then tested a few different portfolio sizes to see, is there like kind of an inflection point where the risk reward trade-off has an inflection point. The idea basically being that, like, obviously the larger number of companies you invest in, the lower your odds of, assuming that you're going to on average have a positive outcome, the lower your odds of going broke or of going under. Each incremental investment has a cost, right? We have to do a bunch of research for each one. We want to be able to support them all, right? That's part of our pitch, is that we are going to be able to provide these sort of advisory services and resources to the companies that we invest in. So we don't want to have too many, but we want to have enough that we are not putting ourselves in a position where whatever cosmic fluctuations can significantly change our outcomes. And what I found was that there was the distribution outcomes was a little too wild under 10 investments. Around 15, the probability of coming out negative was actually below 10%. So 90% of the time with 15 investments, we should see positive return. That doesn't necessarily mean that we're going to beat the market, right? But we will end up with more money than we started with, which is kind of like, that's, to me, that's the starting point. We definitely want to come out with more money than we started with. And at 20 or so, the odds of coming out negative were almost nothing, very low. So we thought about the kind of check size that we'd probably want to be investing in pre-seed, and that was somewhere in the 1 to 500K range or so. So we said probably the median or average will probably be something like 200K. So 15 investments, 200K. Let's raise $3 million to start. And so that's what we did. We raised $3 million.
Yeah, we raised $3 million. But the other thing about the structure that's cool is that we can raise more funds within the same structure because it's one fund effectively. It's one company. So we're never going to have a DevCap 1, DevCap 2, DevCap 3, 4, 5. Everything's going to be in this evergreen fund. So let's say it's a year from now and our first batch of investments are doing well. These companies have moved from pre-seed to seed to Series A. We're going to mark up our portfolio, of course, but then go out and probably raise more money once we're fully deployed. And that will be on a per share basis. Our first round, pick a number, we chose 10 cents per share. Maybe by then we'll be at 15 cents per share. And there is a public market equivalent for this that we're seeing now in the US. If you look at ticker symbol DXYZ, they're buying up secondaries in late stage private companies like SpaceX and Stripe. And that, at one point, a few weeks ago, was trading 8 times what you would deem NAV. I think now it's down to 2 or 3 times NAV. But all that to say, there's an appetite for investors from this type of structure. Now, that one's public. I think for us in the long run, we do see a path to take DevCap public, even if it's not our base case. I think it's an interesting avenue, and we did structure it to leave that option open.
Yeah, I think you mentioned the XYZ, and there was a funny article written about the things they were trading at something like 1,000 times their net asset value or something crazy. Just shows the appetite, like you said. What's been the reception on the LP front? Imagine going back to being told no a lot. So the positive feedback and negative feedback you've gotten from LPs.
Yeah, the first batch of closes was tough, right? It was mostly family and friends. We're coming out with a new model. We have a pitch deck, and I think I have a decent background, as does Max. But other than that, it's an idea and a plan. It got subsequently easier as we went. So we did 3 closes of round 1, and now we're done. It was about a month apart. And the reception was tough, and it got easier as we went, as we proved out the model, and as we made our first and then second investment fairly quick. And they were pretty attractive companies. I think for our investors that we met, it's a bit of a different group. A lot of them are family offices. A lot of them are public market investors. A lot of them are industry pros from my old days as a portfolio manager. And I think the thesis boiled down to three things. And if the answer is yes to all of them, they invested. Is AI going to be the next big thing? Yes, move on. Do I know enough to invest in it myself? And for this one, most investors say, no, I don't. I need to find someone I can back. Are Max and Jordan the right guys? Do they have the right backgrounds? Well, certainly they do. And Max and the rest of the team has the AI chops. And then finally, is this the right structure? If you got through all those questions with the right answer, you generally came out with a yes. There were a few people who said, no, let's see the model prove out and come back to me at the end of the year. And now we're actually building up I keep a soft list, obviously, in Excel, because I'm a financial guy. So everything's done in Excel, of people to circle back to in Q4 this year. And we'll see. It all comes down to how quickly we can deploy. But I think like with a startup, it gets easier as you go and you start getting product market fit.
So maybe that's a good time to double click on the startups that you guys are investing in, right? It's like we talked about AI, and what's the joke is, what's the difference between machine learning and AI? Machine learning is written in Python, AI is written in PowerPoint. So I look at you guys as actually really knowledgeable with high tech chops, deep business knowledge in that field. So what excites you? What types of AI companies will you be looking to invest in?
So I was just debating with another VC this morning. He was asking me what I look at. He's like, just B2B SaaS, right? Well, I said, well, no, really, it's anything AI. It just so happens that all the B2B SaaS AI plays I see are solid businesses, good long-term plan, and they're building real moats. And then all the B2B AI companies I'm seeing, tend to be either GPT wrappers without much deep tech, or they're just really cool little features that people play around with and then have a huge churn off of because they're not interested anymore. The next big thing's out. We like any space, you look for long-term moats, you look for lock-in, you look for competitive edge that can't be displaced over time by Microsoft, Google, and Amazon. And that's the thing with AI too, right? You have 3 huge behemoths in the space that you can't ignore. So whenever investing in a startup, first thing we look at is, can these startups just get rolled over by Microsoft or Google or Amazon, or are they going to be able to stand up on their own 2 feet long enough and build up a nice niche with a strong moat that they could build off of? And I'll let Max talk about the tech.
Yeah, I would say when we went into this, a lot of people use the analogy of the internet because the internet, everybody remembers, it happened in the 90s. A lot of people who are investing now or were alive at the time remember is just the crazy excitement and the way that the world changed with the adoption of the internet. I see it as a little bit differently. I think that the rise of computers in administrative industries, or the secretary doesn't really exist anymore, right? Bureaucracies, the way that they existed in the 70s and the 80s, those kinds of bureaucracies don't really exist anymore, right? Because computers are able to process structured information and to model bureaucratic structures way more efficiently than people can. What I think generative models like language models are going to do is like more akin to that than the internet. It's not really a communication medium. It's more that language models are unlocking the ability to model unstructured transfers of information, transformations of information, unstructured processes in ways that were never possible before, right? And automate those systems. And so I think that really is going to touch every possible industry. There is no such thing as a company that has no bureaucracy, that has no interpersonal communication that could leverage the power of language models. And so when people ask me like what kind of companies you're looking for, really we're just looking for companies that are doing things in a new way that weren't possible before. That could be in a lot of places. And I think the fact that we're both sort of generalists, that I've been working in consulting and have touched companies in many different verticals throughout the years, and Jordan was a public markets investor who really worked in a ton of different verticals as well, gives us that edge in being able to understand the ways in which this technology is going to interact with a variety of different industries, right? And so when somebody comes to us with a pitch like, hey, we are building tools for mining companies, which is one of the companies that we invested in, we have the practice of thinking critically about the ways in which those industries interact with the rest of the world, the ways that the people who work for those companies interact with each other, right? And the ways that technology fits into the processes that they have. You wouldn't think of a mining company as a potential target for machine learning or generative AI, but it really is, right? There's a lot of logistics, and there are a lot of big, complicated machines that are very expensive, that have to interact with the real world, which is messy, which is unstructured, right? And all of those things are suddenly, as of now, targets for machine learning systems that just were not targets for machine learning systems 3, 4, 5 years ago.
Yeah, it really is, I think, the most exciting field in technology that's happening globally today. Even spaces like bio, let's say, there's a lot of exciting stuff happening. A lot of it is because of AI technologies, right? So maybe space, that's like rockets, but like really, I think AI is the most fundamental one. And Max, I really like your analogy in terms of the shift. I agree, it's more akin to the computer in the 70s and 80s than it is akin to, let's say, the internet per se, where it's like it's this really transformative technology. And maybe last point, I think, is I see it as a shift for how we interact with computers. If you think of how you clack on a keyboard or go to an ATM machine or all the myriads of ways that we interact with machines, it's moving right now to how we interact with people. It's going to be using natural language. So if you take that as a premise, then every single interaction across both businesses, consumer side, is really moving to this whole new paradigm. So to your point of, it's going to touch everything. Yeah, and then in a sense of geography, are you guys thinking about a specific geo? And then also maybe a few startups if you can highlight that you're speaking to, or types of actual use cases that you guys are getting excited about.
Yeah, just one more thing before we move on terms of how we see the market. I think last year we talked about talking to computer programs in natural language, and that's amazing. A huge advancement. It makes it easy and makes technology accessible for anyone. My grandfather can do that, who's 92 years old. And I think that was the big advancement in 2023. 2023 was the year of the chatbot. That's effectively what ChatGPT is. I think we're moving more towards agents, LM-powered agents, multiple agents in each device, in each product, being able to power them and make them more efficient and just take action on your behalf. to move things forward and make them more seamless, to actually bring the promise of the internet. Oh, you can do this and be 10 times more efficient because computers will just handle it for you. That's the LLM agent. And I think 2024 and 2025 are going to be more focused on that. I think Max and I have had a couple debates whether that's true or not, or just a theory. Definitely still a theory, but we will see. The next one.
The types of startups, use cases, and geo.
Okay. And in terms of geography, we're pretty open. It's easy to say North America because me and Max are both in Montreal, and our advisors are based in New York and San Francisco and Toronto. Those are the major cities, especially for AI. So that part's easy. But Monadical has a tech team all over the world. So we got guys in Colombia, we got guys in Kenya, I should say a woman in Kenya. We have people in Asia and Europe. So I tell my engineers, Max tells our engineers, if you guys see anything cool, you're in the community, you know what's going on, you go to meetups, you have friends, they're all starting companies, bring them to us. I don't know any founder who doesn't want an intro to a VC. And our engineers, they're learning what makes a good company, but they truly understand the technology. So it's almost a good pre-selected company that we know the tech stack's going to be strong. So in terms of geo, really wide open. In terms of check size, it generally, like Max says, ranges from about 100K to 500K. And other than that, we're pretty flexible. People want us to be advisors. We could be advisors. If they want us to be a director, we could. We don't really insist on anything. We just try to be flexible and be helpful where we can.
I love the vision. And going back to culture and finding these people that are building like world-changing technologies. I'd be remiss if I don't ask the question of analogies between your poker days and your now investment days. So any analogies, any lessons? I know it's still early for DevCap, but you guys obviously have thought about this.
Yeah, so many. I think that poker inherently, it's a game of imperfect information, right? Where the way to approach being really good at poker is you understand the structure of the game. You have to think about it in terms of like a tree of possible decisions, right? And each decision can lead to a tree of possible outcomes, right? And by playing, when you play poker for years and years, you really develop this sort of like intuition for the ways in which these complicated trees of possible outcomes, each weighted by its own probability that you have to guess at, right? You have to guess, oh, I think that this person's more likely to raise with this hand than that one. And then the pot sizes at every street, the size of the pot really has a huge impact on the expected value of a certain sequence of potential actions. And you have to be able to think about all those different possibilities and then boil them down to, okay, given that whole tree, I'm going to do kind of guesstimate all the different probabilistic outcomes and bring it down to, okay, therefore I'm going to take this action. I think with investing, it's very similar, right? With investing, when you're looking at possible companies, there are so many ways that could play out in the future, right? And what you have to do is you have to think about the probabilistic distribution of possible outcomes, right? I think that not all companies are the same, right? Some companies, you invest in them and you're like, I think that the floor is pretty high here. I think this company is probably going to be fine, but the upside's not so huge. And so what's the expected value on that investment? There are others where this is a very boom or bust kind of investment, right? This is a company where I don't really see them even getting acqui-hired because it's so wild what they're doing and so irrelevant to the rest of the industry. It's so innovative. Maybe some Microsoft or Google cares about the quality of the engineers or something. They're not going to get an ROI, right, on that. But if they're right, if this thing works, right, then this could be a paradigm shift in the industry and the upside's huge. Right? And how do you reason about those tiny probabilities and those huge numbers? It's hard. And I think that's where all of the experience that we have playing poker for years and years, seeing firsthand experiencing these low probability events and how often they happen really, and the big pots and the big tournament wins. How often does that really happen? And how do you feel that probability? I think that's one of the big ways in which poker helps with investing.
Yeah, I think it helps a lot as well, both in my public market investing days and in venture capital. I would say understanding what a true sample size is very important. A lot of public market investors don't truly understand, and it's hard to when you only live one life. You're probably working a 30-year career, and even then, after 10 years, you're considered experienced in public market investing. A 10-year sample size is tiny. In poker, we would play online 8 tables at once. So if we were working, we would probably get in about 50,000 hands a month. What is that? 600,000 hands a year. You can hit some bad runs. In investing, you think how horribly unlucky you are if you lose 11 out of 12 coin flips in a bucket. In poker, you'd probably go through a stretch of that almost once a week if you're playing enough. And you just realize how unlucky you could run. And that's just stats. That's just probabilities. So you get an appreciation for what a true sample size is. And then that has knock-on effects. If you understand that, man, I did great in that fund one. What was your sample size? It was 15, 20, let's say 20 companies. And did you get lucky? Did you not? There's obviously some skill involved, but there's a big element of luck. And to just understand that. And I had the saying from my public market investing days, you're not as smart as you think you are when things are going, and you're not as dumb as you feel when they're not. Because we all feel like we're the world's biggest idiots when things are going badly. But you know what? You're probably not. You're probably a smart guy. You're the same guy you were 6 months ago when things are going great. You haven't changed. And it's important to understand the power of variance and variability and not to get too down and not to have that alter your process if the process is good. If the process is bad, fine, change it. But if the process is good, don't change it just because the recent results have been bad.
Yeah, and I think that ties directly into the current condition of our economic system, right? Where there was COVID, there were these massive stimulus packages released into the economy to try to like prop up everything so that the economy wouldn't crash with this giant disruption. Then meanwhile, Russia invaded Ukraine and cut off these major supply chains, really disrupted them in a major way. The embargoes on Russia raised the price of energy across the globe, right? So Ukraine's also one of the major producers of food in the world. Food and energy are two of the biggest inputs to the economy as a whole, right? People need to eat and they need energy for every single kind of business activity. And so it's natural that you would see a bunch of inflation, right? And it's natural that after a giant stimulus package that followed an enormous disruption to the economy, that there would be a ripple effect with that. And I think that a lot of the lesson that you can learn from having played poker for years and been through these kinds of swings and having to go through that process of questioning yourself and saying, am I really, has the game changed? Has it left me behind? Am I doing well still? Is this okay when you're losing? I think that helps with this ability to take a step back when economic conditions are not so great as they have been the past couple of years, and understand that, well, time changes all things, right? And these macro events that you're seeing, they're probably not indicators of a like seismic shift in the way that the world economy works, right? It's probably going to adapt to the new conditions of the world, right? The economy is pretty flexible and dynamic. And so all that's to say that investing in these kinds of times is great, because I feel like a lot of people don't fully appreciate how temporary the lows are, right? They don't, and it's very hard to pull yourself out of the current reality and look at the big picture with a sober mind. And we're hoping that that's something that we can kind of do here. Now is the time to invest in our minds, right? That people are afraid. LPs don't want to invest. There are structural reasons like high interest rates. There are social reasons. This fear, this lack of appreciation of sample sizes. All of that depresses the amount of capital that's available out there, which means it's a great time to have capital, right? So I think that really is that's a big part of the kind of underlying motivation for what we're doing now. That's a big part of why I was sold on the idea of putting some of my personal time and resources into starting this project with Jordan.
Yeah, very interesting, guys. And I think we'll need to build like an agent that resembles like poker behavior for investing. It's like I'd like to have this as a tool for my work. I just want to thank you guys for your time. It's really fascinating. I think we should do this again in a few years and see how much you've progressed. Maybe final question is, if people want to learn more, stay in touch, what's the best way?
Sure. Yeah, we use Monadical engineers to just build the DevCap website. You could find us at devcap.ai. You could feel free to submit your deck there. Reach out to me directly, Jordan at devcap.ai. I'm also quite active on LinkedIn. Max will be harder to find. He's very anti-social media, but probably easiest to get in touch through me.
Yeah, I'm too distractible for social media. I am, however, launching a podcast of my own. I submitted this morning a teaser to our producer. It's going to be called Paradigmatic. It's going to be a podcast about the ways in which technology and society and policy kind of interact with each other. A very kind of big picture podcast, but so far I've interviewed 3 entrepreneurs who have different kind of perspectives on regulation, on ethics in engineering, and on the kind of underlying thought process that you use to think about engineering decisions in the world.
Very interesting. Where does the name come from? Paradigmatic? What does that mean?
Your guess is as good as mine. I just thought it sounded cool.
Yeah, Max is very good at choosing names like Monadical and Paradigmatic that nobody understands and require long, complex explanations.
Well, Monadical started as an inside joke. We were hanging out with a bunch of type theorists, like Haskell nerds, and there were just so many conversations about what is a monad, right? Like it became a running joke. You just buy one of these guys a beer and ask them about a monad, and boom, you got entertainment for the next 3 hours. So when we originally started our product company, Monadical was going to be the internal company that we use. We were set up in Colombia, actually, and it was going to be the company that we used to hire developers in Colombia, where we were living at the time. And we just named it that way as an inside joke. And then we switched to consulting. It's by accident became the name of our public facing companies. Yeah, I think type theory is cool. Haskell's pretty awesome. I love functional programming, but I'm certainly not a type theorist. And our company is not like a functional programming company, even though the Monadical title certainly implies that it is.
I'm going to make sure to listen and also link it to the show notes. Sounds very cool as a topic. And I just want to thank you guys for your time. It was super interesting.
Thanks so much for having us.
Yeah, thanks very much.
Thank you for listening to the Flagship Podcast. If you like the show, please don't forget to subscribe. Merci beaucoup.